In this video, I'll be breaking down how much you need to make in order to afford a 2022 Rivian R1S. You should really consider following one of these rules in order to avoid making a huge mistake that will end up setting you back for years. I've also included a link to a free auto quote where you could save up to $600 a year in the description below, but more on that later. There are 4 options that I'll be covering today, and you can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation to get from point A to point B, and some are willing to sacrifice quite a lot more in order to get the car that they really want. Stick around to the end of the video to find out which method would be best for you. This is 4-Wheel Finance, a channel dedicated to helping you make smart financial decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make, so please click the like and subscribe button and comment down below what other vehicles you would like to see. The first rule is the 24-10 rule, and this states that you must put 20% down on the vehicle, you can't finance it for more than 4 years or 48 months, and the payment can't be more than 10% of your monthly gross income. Since the 2022 Rivian R1S has an MSRP of $72,500, you would need to put down $14,500. And with the average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $1,305.95. Take note here that you're also paying about $4,700 in interest. Bankrate states that the average monthly insurance cost is about $148, but this varies a ton from person to person, so use that smart financial link in the description below to find out exactly how much it would cost for you to insure a 2022 Rivian R1S. This would bring your monthly total to $1,453.95. Now going back to that 24-10 rule, given that your monthly cost would be $1,453, you would need a monthly gross income of 10 times that, or $14,539.50. This would come up to about $174,474 annually. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car, put whatever your payment of $1,305 on the market instead. Over the course of 5 years with a conservative 6% rate of return, this would turn into about $91,186, gaining well over $10,000 in interest alone. And this is just for the first 5 years. If you were to continue this for 10 years, it would amount to $213,215 at only a 6% rate of return. And for reference here, the stock market averages about 10% a year, so that 6% is pretty conservative. The next rule will be the Dave Ramsey rule. You must have a 3 to 6 month emergency fund built up. The vehicle can't be more than 50% of your annual gross income, and you must purchase it in cash. Given that the 2022 Rivian R1S is about $72,500, your annual gross income would need to be a minimum of $145,000. And ideally, it's pretty nice to purchase a vehicle in cash, as you would avoid having to pay that $4,700 in interest, and your insurance would be a little bit lower. But obviously, there's not too many people that have $72,000 in cash they can put out a vehicle. Those first 2 rules are pretty difficult to achieve, and you would assume that the average person wouldn't be able to follow them, which is why I've come up with my own rule, which is a little more relaxed. It kind of covers you from all sides. For my rule, you need to have at least a 6-month emergency fund, invest 15% of your gross income into your 401k, and max out both your Roth IRA and ideally your HSA, but I'll leave that HSA as optional, as some companies don't give you that option. Yes, this must seem like a lot of saving and investing, but I don't give you a monthly percent rule that you have to stick to once you make those investments. It's really up to you to decide if you want to spend more of your monthly income on the vehicle, or if you'd rather go out to dinner more or on vacations and spend your money on clothes or that sort of thing. And the 6-month emergency fund just ensures that you're covered in the case that an emergency or anything crazy happens. And the investment portion gives you a little bit of financial backing, a little bit of security later in life when you're going to need it the most. When you're looking at retiring in that 60, 65, or even earlier, you're going to want to start investing early on. And the majority of people say that, well, nothing's really guaranteed. You should live your life to the fullest, even at a young age. And while it's true that nothing's guaranteed, it's really difficult to put a value on having peace of mind for yourself or your family's future. The final rule is the 1/10 rule, which was developed by Financial Samurai. It's a pretty popular blog, so you may have heard of it before. And personally, it's one that I think that a lot of people that are really trying to build their wealth rapidly should consider. It really doesn't allow you to purchase a new vehicle, but it does allow you to spend responsibly, which ends up reducing your financial car ownership stress and increases your net worth a lot quicker over time. It's really straightforward, but pretty difficult to follow. It states that you shouldn't spend more than 10% of your gross annual income on a vehicle. It can be new or old, but it's going to be used in this case for the most majority of people. And you must own it for at least 5 years, but ideally more. And the theory behind this here is to minimize your financial stress, which frees up some money so you can invest in assets, opportunities, business ventures, things like that may come your way. It's a lot more stressful and difficult making life decisions when you're worried about payments each month. Imagine if you took that car payment we talked about earlier, about $1,300, and put half of it at least in investments and whatnot. Over the course of a lifetime of not having an expensive car payment, that's going to turn out to be a ton of money. Once again, this is Four Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them in the description down below and use that Smart Financial link. You can save up to $600 a year annually. I've also got a link down there to a couple of products on Amazon that'll just help keep the quality of your car up. Something like